Hi, welcome everybody. This is Raj Shah from Invest in Pre-Leased, where we help you profit from curated property proposals. And we are super excited today to talk about the flavor of the season and all the seasons beyond, which is going to be SM REIT. And we are excited to talk to Krupa Joysar, who's a company secretary come lawyer. She's the founder of Krupa Joysar and Associates with more than 10 years of experience in various corporate laws, advising and dealing with clients registered under various SEBI regulations like investment advisors, PMS, listed companies, AIFs, and many, many more. So welcome, Krupa. We are super, happy and excited to have you on the podcast. And we are looking forward to getting a lot of answers from you on SM REITs.
Sure. Thank you so much, Raj, for having me here. We talk here are from the educational point of view, okay, and should not be considered as a professional advice. So, viewers, please go and consult professionals while dealing with any matters that we'll be talking about. Thank you.
While I've given her official introduction, I must also tell you, Krupa vets all our documents when our investors invest in fractional ownership opportunities, and I can say that she's been instrumental in not just pointing out and protecting the investors' interest, but also she's instrumental in getting these few clauses changed, which has not just helped our set of investors but even beyond. And of course, people may have seen the LLP versus private limited video that we've done with her, which is one of our best performing videos. And with that, we get into the discussion over SM REITs.
And I am so happy, Raj, that while we were going through this SM REITs provisions, I realized there were so many clauses which we asked the fractional ownership platforms to change now, which are in line with SME REITs provisions. So, we can pat our back, okay, that we have been striving to protect investors' interest even before SM REITs came in. So
SEBI regulation came in. So I think all the credit can definitely be taken by you, because we have no idea about documentation. The only thing we did is I think the credit can be taken by Rishi to have you on board. So, credit to Rishi for that. Okay, Krupa, so the first question for you is, what is REITs?
What is REIT? The full form of REIT is Real Estate Investment Trusts. Okay, so what do they do is, in turn, these are a trust, okay, which hold or invest in securities or properties. Okay, so securities here, when we are talking about REITs, means real estate properties, okay, or assets. So their main job is to invest in these kinds of real estate properties, okay, and in turn have investors on board and give them returns. So this is what majorly a REIT will do. Okay, so now going little technical, that these regulations, okay, the SEBI regulations earlier, before 8th March 2024 amendment, where they brought in the concept of SM REITs. REITs was defined as a trust registered under these regulations. But now they have clarified that what a REIT means. So here a REIT is a person which is pooling from the investors at least rupees 50 crores. Okay, so the first point is 50 crore, okay, or more from investors. That is minimum of 200 investors, and they invest in the real assets, real estate properties and assets, and in turn to give income to these investors without giving them the control to run this trust or these assets. So these are the four elements of a REIT. And why there is an explanation there that SM REIT is also categorized as REIT. So now we jump to SM REIT. Then what is SM REIT? Okay, so SM REIT is same a trust which pools 50 crores or more from at least 200 investors. Okay, here, so the asset size. So we are seeing when we are talking about 50 crores or more. So here we are referring to the asset. Asset is, again, I am re-clarifying it, is as real estate asset or a property in which they intend to invest. Okay, so that the value of that asset should be 50 crores. Okay, taking money at least from 200 investors Here, the limit on SM REIT is that the value of the asset should not be more than 500 crores. So while in the podcast or while in this video, we can use words like high-end REITs and SM REITs. So SM REITs is something where the asset size is 50 crores to 500 crores, and high-end REITs or only REITs is more than 500 crores. And the minimum investors that you need is 200 investors. So this is what the SM REIT or REIT is.
Krupa, two questions again. One, what are the features of SM REIT in terms of differentiation from a normal REIT? How will it impact the investors?
Okay, so before answering to this question about what are the features or how it will impact, okay, first let's go to a background or a history that why SM REITs is required or was required. So earlier, when the REITs had properties worth rupees 500 crores or more, and the regulations provided that the investment manager or the sponsor need 15% of that kind of assets, its own holding in that asset. Okay, the public offer should be worth more than 250 crores. So when you are talking about, see, these numbers are huge for people like you and me.
Retail investors.
Yes, the retail investors, the numbers are so huge that I think that's where the concept of fractional ownership platform came into picture, because the retail investors did not find themselves investing in these kinds of high-end REITs. Okay, and for this fractional ownership platforms, they could understand the need of the market, where retail investors like you and me wanted to own bigger assets, okay, but just paying some fractional money. So this is where fractional ownership came in. Okay, so we know REITs, we know fractional ownerships. So now what happened is fractional ownership, they lacked a lot of clarity. So there were no specific regulations regulating this fractional ownership. So there was no transparency. Okay, there was no consistency in what kind of disclosures to be made to the investors, what kind of accounts or books to be maintained, what kind of KYC to be taken from the investors. It was nowhere. So there were no regulations, these FOPs were allowed to operate the way they wanted. Of course, within the four corners of law, if they are a private company, they have to follow the private company provisions, that is Companies Act provisions, or if they are an LLP, they have to follow LLP Act. Those all said and done.
So you were mentioning about this. My question is, did you, in your experience in vetting all these documentations, do you feel that different asset managers, while of course staying, like you said, in the four corners of the company law, had their own different documentation? Like some people had a shareholder agreement, some people didn't have, and so you could throw a little light on that.
Definitely.
As to what were the different, again, they were all accepted, but what was the difference, and how therefore, again, from investors' perspective, they invested in one platform where they saw a shareholder agreement. For the next one, they're asking me, where's the shareholder agreement? I'm telling them there is no shareholder agreement.
Shareholders agreement, yes.
So yeah, if you could just maybe point out a couple of things.
Sure. So I'll answer to that, before I'll complete what I was saying about fractional ownership. Okay. Mm-hmm. And so I touched upon high-end REITs. I said, what is fractional ownership? Again, I'll try to touch upon AIFs. Okay. Later we'll understand. But see, right now in market, we have real estate AIFs. Okay. Who are investing into under construction properties. Okay. But यहाँ पे भी क्या हो जाता है, for AIFs the minimum amount to be taken from an investor is 1 crore. Again, the retail investors is left out because 1 crore is a big sum of money. So already in market we have high-end REITs, we have real estate AIFs, and we have fractional ownership. So we wanted, as a retail investor, okay, there should have been something to protect these investors from the regulatory perspective. So hence SEBI came out with SM REITs, that is small medium REITs, which is a combination of all of this. I cannot say it is similar, but combination. So I can say good things from all. So this is how a SME REIT was necessary, or SEBI thought it is important to have such kind of regulations to regulate these fractional ownerships who can now migrate under these provisions. We will cover that how, what is the timeline, how to do it. But this is just to give a background that why SM REITs was important. Now coming to your question, Raj. Yes, while going through, as I mentioned, that we brought out so many clauses that though it was allowed as per Companies Act to to be in that way, but we insisted that this should be written specifically. For example, one thing I would like to highlight is we insisted on having online meetings only, and we pushed all these fractional ownership platforms to mandatorily mention in their share subscription agreement or their AOA to make sure that all the meetings with the investors is mandatorily online and no offline is allowed. Okay, though as per Companies Act, these company can very well do an offline meetings. So though if they do an offline meeting, yes, it is within the four corners of law. But while we were discussing, and we understand that investors are from pan India or could be some
Even
foreign
abroad.
investor. Okay, so no investor will travel to this registered office of this fractional ownership platform to see their annual accounts or to ask questions. Okay, so we over there, the only intention was to bring more transparency and to push investors to participate, which is very much needed. So this is where, okay, so now when I am reading this SM REITs provisions, okay, where SEBI has mandated online meetings, okay, I feel very satisfied because now investors, because now even the fractional ownership platforms where they showed resistance of putting this mandatory clause. See, I'm not saying that their intent was to defraud, but they wanted to have that flexibility. They didn't want to mention this in their documents to mandate themselves to have an online meeting only.
Right.
But now with this SM REITs, okay, they will be mandated to have an online meeting. So this is just an example. There were so many clauses which we asked them to change or asked them to include or write specifically so that the investors' interest is protected.
So, Krupa, in this case, can you tell us who are now going to be all the stakeholders in SM REIT?
So, see, in what happens is...
And you mentioned about REAIF, Real Estate AIF. If you want to maybe just draw some parallel or help us understand in comparison to a REAIF.
See, AIFs are an old concept now. Yes, Raj.
What is an AIF?
Okay, so AIF is Alternative Investment Fund. Okay, in layman language, ये क्या करता है fund? ये लोगों से पैसा लेता है, एक scheme draw करता है. Okay, the scheme says that where the money from the investors when collected will be invested and what kind of return that scheme will give to the investors. So this is what an AIF, typically a AIF does. Okay, there are different categories of AIF. I don't want to touch upon them that there are three types of categories: close-ended scheme, open-ended scheme. I don't want it will be a lot of khichdi then. Let's not touch there, but we understand.
Hey, but you need to touch one. That's Cat 2 because I think that's related to real estate.
Category
so that's
2?
that one. Yeah, just one because a little glimpse because majority of people know about
Yes.
Cat 2 and real estate. So that's the only, and it's really rate. So that's the reason.
So what happens is, see, this AIFs, okay. So first we understand how a AIF works. Why we are touching upon that is because somewhere REITs has adopted same kind of model. Okay, same kinds of stakeholders. So if we understand the functioning of a AIF well, I think REITs automatically samajh aa jata hai. And then and SM REITs is also very similar. There is only with one change that I will cover it up. Okay, so for AIF, okay, the stakeholders involved is majorly, okay, there is a sponsor. The sponsor is a person who has this plan of making a trust. Okay, AIF could be a trust, could be a company, or could be a LLP. Okay, so for AIF, so it's a body. Okay, so if I'm now sponsor will incorporate this kind of an entity. So when I'm saying entity, again I'll clarify, it could be a trust, it could be a LLP, or it could be a company.
This is only in AIF's case.
Only in AIFs. So now we have an entity. Okay, this entity will then appoint, okay, a trustee and then manager. And this entity will then draw down schemes. See, there are also in AIF, there are provisions where a custodian is mandatorily applicable and all. Okay, but then that is a separate topic, and we will have to do a separate podcast for AIF. But this is to just give you a background that is how a functioning of an AIF is. So what happens is this sponsor forms a AIF. This AIF, okay, is registered with SEBI. Okay, by giving them a placement memorandum. Okay, placement memorandum is nothing but an offer document that what kind of scheme as a AIF I am launching. Okay, whether I will be investing these funds in real estate or in equity or debt listed funds. Okay, that's how AIF is. And there is a trustee who will make sure that the interest of these investors is protected. Okay, so if the AIF says, or the scheme or the placement memorandum says that I will invest in equity or I will invest in only startups, okay, I have to make sure that funds are only going there. Okay, whatever the returns are promised, I'm getting that as an investor. So that is the function of a AIF. Okay. At what and manager is then manages the functioning of a AIF and the assets that it holds. Okay, so these are the parties involved in AIF. Similarly, in REITs, there are same kind of parties in. Okay, there is a sponsor who will again form an entity. Okay, which is REIT.
High-end REITs or SM REITs, or you're saying
both.
REITs as general? Okay.
Yes, both.
Okay.
So there is a sponsor who will incorporate a REIT. Okay, REIT is again will get registered with SEBI, get a registration certificate, and it will launch a scheme. Okay, and the scheme will say that what kind of asset you are planning to invest in. Okay, and what would be the valuation of that asset, and it will take pool funds from the investors and appoint a investment manager and a trustee. So investment manager will manage this asset and trustee will see that the interest of the investors is protected. This is what a REIT is. Now, a small change in SM REIT is here we spoke about a sponsor, a trustee, investment manager, and investors.
Right.
Here in SM REIT, a sponsor and an investment manager is the same person. So now when I say investment manager is someone who has made this REIT, has launched a scheme, has appointed a trustee, and is pooling funds from the investors, and in turn this money will be invested in a real estate property, will take some management fees, whatever income that asset generates will be then distributed to the investors after deducting the operational expenses of that REIT.
Now, could you give us an example of, let's say, within the current structure of how fractional ownership platforms are? Let's say we have the asset manager, right? And they launch a scheme, let's say, for example, Bangalore Office Opportunity 1. Now, in this case, they also have a trustee to keep the documents?
Not mandatory.
Not mandatory. Okay.
Yeah, mandatory.
Not mandatory so far. Okay.
Yeah.
Great. So now can you explain to us when this asset manager, there is an asset manager who's managing the SPV, a private limited, in this case, we are looking at a private limited, which is Bangalore Office Opportunity 1 Private Limited. How is this going to change when they migrate to SM REIT?
We have to first understand to migrate to SM REIT provisions, your minimum asset size should be 50 crores. So if suppose for your Bangalore office opportunity, if the asset size is less than 50 crores, you won't be categorized as SM REIT. You will not fall under the provisions of REIT.
So then I would want to ask, can two schemes be combined together and launched as one SM REIT?
Schemes, I would suggest. Okay, I'll come to that. Yes.
Two properties. Basically, I had the same question. That let's say if there is a property currently which is 25 crores and another property that's 26 crores, can they combine both these properties and then therefore qualify as 50 crore plus and put it as under one scheme? Is that possible?
There is no restriction in the act which says you can't combine.
Okay, that answers the question. Yes. So there is. So all asset managers who have various schemes, because we know that they have a 22 CR property also, sometimes even as low as 18 crores. We've seen one property which was as low as 6 crores also in a fractional. And then, of course, so you're saying these can be combined and put together. The only question then is from a commercial angle that this in some sense replicates the REIT, the high-end REIT, because they have multiple properties and you're earning rental income from that. So one decision that one needs to take is a single property better or multiple properties better? And we will come up with a video on that separately.
Krupa, like you rightly said, they can be combined. Now, my worry is, for example, both the properties can be different in nature in terms of structuring. For example, one can be an LLP, one can be a private limited, one can be having a lot of challenges. So when these two are combined and brought together in one scheme, will there be a guideline that will be followed, or
No. So, very important, while we are talking about REITs or SM REITs, there is an involvement of an SPV, that is special purpose vehicle. So what will happen is the REITs, will form a wholly owned subsidiary, which is known as SPV, which again has to be a company. So again, Raj, I'll point out that the last video that we did, where we showed our inclination and our recommendation was that the property or these kinds of fractional ownership platforms should always form a private limited or a public limited company and not LLPs. Right. Is somewhere now getting approval. A thumbs up or
approval from SEBI.
Yes, from SEBI. Because what the provisions specifically mentioned for SM REITs is that these SPVs are to be a private limited company who in turn will hold properties. So these assets or properties, so what will happen, there will be this REIT ke niche the wholly owned subsidiary SPV rahegi, and this SPV will in turn hold the properties. Right. So one scheme, one SPV and properties.
So what happens to the property which was bought in SPV, which was LLP? Now, if it has to migrate to SM REIT, so will there be a new entity and everything will be? So how would that be absorbed?
So see, we have to see that time will answer the question. But right now, I feel the right way to go about it is to convert your LLP into a private limited company or a public limited company, depending on the number of members you have, and do the entire migration process and go to SEBI. This is what my interpretation is, because when you see the definition of SPV in high-end REITs, and when you see SM REITs, it's different. In SM REITs, it speaks about only company,
which is a private limited company.
Private or a public limited,
right? Or a public limited, because LLP technically is a partnership.
Correct. And there's a separate act for it. So, Limited Liability Partnership Act regulates LLP. Companies Act regulates company.
Great. So, will all fractional ownership platforms have to migrate?
Again, the limits. So 50 crores and 200 investors.
So what if the property is 50 crores but doesn't have 200 investors because people have put in larger checks?
No, then you won't fall under SM REITs, because the definition uses word and 50 crores and minimum of investors are 200.
Okay, now the thing is, with private limiteds, maximum people who can participate is 200?
Yes.
So how will this work? Because
then it will be a public limited. You need, when you are talking about company, keep a bigger horizon. It could be an unlisted public company having 500 investors, having 300 investors.
So at this point in time, what happens is, for a particular, there are a lot of assets, right, which are more than, technically 25 lakhs is what the base was for most people in general. 25 into 200 is 50 crores. So if it was 50 crores, then you have a maximum cap of 200, and that's why they actually kept it 25 lakhs. In fact, we also know of examples where the property is worth 60 crores and people said we will increase the ticket size to 30 lakhs. So they said minimum investment is 30 lakhs because they wanted to ensure that they meet the criteria of
for private limited.
For private limited.
Yes, but that's what here. The point is, they had that flexibility that they could limit the number of people because they wanted only 100 people or 100 investors or 150 investors. Hence, the ticket size went up. But that doesn't mean that you cannot have more investors. So if you categorize yourself as public company, unlisted public company, you can have even 300 investors. And that is where the SM REIT is here, because the minimum amount of investment from a retail investor here is minimum of 10 lakh rupees. On retail investors, to come and participate in SM REITs and invest their money.
So are you saying that, very simply put, because it's a 50 crore property, taking the same example, and now the size is reduced to 10 crores, technically there are 500 participants, maybe they have 4 units each, like 10 lakhs into 2.5 if it's a 25 lakh investment. So therefore this will still qualify and they will move into SM REITs?
There are only 2 criteria: 50 crores of asset and minimum 200 investors. So if you are qualifying for both of these eligibility criteria, then you fall under the provisions of SM REITs, and then you will have to take a registration. See, just because right now I am qualifying these 2 criteria doesn't automatically I become SM REIT. एक तो मेरे पास REIT है ही नहीं. I am holding this. Okay, generally right now what these fractional ownership are doing is, okay, they themselves are holding a property. Okay, there is no trust here. There is trustee may or may not be there. Okay, this could be a private company or a LLP. So right now, I think that's where, when I said that SM REIT, why it was important is because as there were no regulations, people were taking their own flexibility.
Sorry, I have one question, Krupa. There is one more mention about 10 lakhs as a minimum ticket size being there for the SM REIT. So then when you are buying a 25 lakh unit and you're going ahead, suppose for example, an asset manager is now trying to migrate to the SM REIT criteria of having 50 crore and minimum 200 assets. So 2 questions here. One, what happens about that 10 lakh investment minimum ticket size, the unit size, which is supposed to be getting listed on the SEBI, as in the platform where we will be looking at. So what happens to that, and what is the maximum number of capping for a scheme to have in terms of investors? So a scheme can have what at large, what for 50 crores, what will be the large number of divided by 10 lakhs? So 500 is what you're talking about as a maximum cap.
So so see, if you say from the regulation perspective, there is no maximum cap given. Okay, but as mathematically, if your asset size is 500 crores, okay, and if you're taking 10 lakhs from, so it will be the same simple arithmetic will work here.
So the follow-up question is this. Now, if we are looking at how will you qualify as more than 200 investors, are we looking at more than 200 units or individual investors, where let's say I am an investor, but I have technically 4 units of 10 lakhs each. So am I being qualified as 4 investors, or am I being qualified as 1 investor who holds 4 units?
That I have to check and come back, because if I see the definition, there is no as such definition of investors, but according to me, it should be per person.
Okay. So what happens in a situation where it is a 50 crore asset and we have, let's say, 180 investors? How does this migrate to SM REITs?
Just a second, Raj, just a second. I'm still stuck on your question of investors. So whether it is defined somewhere, let me see. So I think it should be per person. Because when we are talking about shareholders, see, I am applying the logic of shareholder. Okay. So I consider it as per person. It could be in joint, it is then a separate investor. It's like if Raj individually, Raj is one investor, Raj and Rishi is another investor. Okay, so when they are saying investor, it is people. Also, they have excluded investment managers and their related parties and associates. So this is, yes, so individual investors. Of course, could be companies. When I speak about individual, then legally I am not correct when I say individual investors. Then it becomes only natural persons.
Which could mean a HUF, it should mean companies, any legal
yes,
entity.
Anything, yes, any legal entity.
Krupa, one more follow-up question to this only. For example, let's look at an ideal scenario of 3 crores, 200 investors, and minimum but get taken care of. But now, for example, I'm doing a migration. I have invested only 25 lakhs. So can a unit be divided into two? For example, one unit is of 10 lakhs. So then I have 25 lakhs. So that half unit, I mean, in terms of even the high-end REITs that we are talking, you don't have something as a concept called half unit, right? You have to be holding one entire unit is what I understand.
Yeah.
So then what happens to the balance 5 lakhs? Because I know that my 20 lakhs will be categorized into two units. But what happens to the 5 lakh that I have further invested?
No. But see, 10 lakh is minimum subscription. So if my asset size is bigger, I can have a minimum subscription amount of 25 lakhs, right? Sorry, maximum I can invest as 25. Sorry. So see, when a minimum is 10 lakhs, you can very well invest in 25. But what I understand is, see, it is more of like a commercial call, and we will have to understand how a scheme, okay, where this SPV is holding the asset, okay, what is the valuation, and what kind of per unit amount they are coming up with. You never know it.
So
The per
technically-
unit could be 12 lakh rupees also.
So basically, the idea is, what I understand from your input is that minimum is they need to start with 10, but they can have 25 also as one unit, is what I'm understanding.
No. See, it is 10 lakh rupees per unit. Okay, so if I want to invest 20 lakhs, okay, I will be given 2 units.
Question is, if you've already invested 25 lakhs, so will you get 2.5 units as credit in your demat account?
Looks like, but fractional again is a question, how will they do it? I think again the scheme we will have to understand that what kind of property value it is and how many investors have invested. So again, I think we will have to practically look into it, that how can we do it.
Sure. So currently there are a lot of...
I feel per unit shouldn't be an issue, or maybe you reduce the size of unit. We will have to understand that how we will, commercially categorize it.
No. So the question here also is this, that minimum unit size will always be 10 lakhs or it can vary.
And minimum subscription price, okay, is 10 lakh rupees per unit. So
again, that's what I'm saying. So in that case, the unit size is defined always to be 10 lakhs or can be 25 or 50 lakhs or anything.
Minimum 10 lakh hai, so it can be more.
It can be more. All right, great. Fair. Makes sense.
Minimum आपको इतना लेना है.
So मतलब मैं 25 लाख का unit size भी I can get it. Is not a problem.
Yes.
So then it solves a lot of issues, because technically if you cap it down to 10 lakh has to be one unit size, then that 25 lakhs really gets painful to categorize for an investor. Here at least we know that you have that 25 lakhs also can be one unit size technically to make lives easier. Fair enough. Noted. So Krupa, that actually brings down to a very interesting question is, what choice do the current asset managers have in terms of migration or no migration? And as in, can they decide to migrate only a few out of their portfolio, or they need to migrate? Is there a ruling as in SM REITs that all the FOP platforms will have to bring their assets under SM REIT? How does this is going to work?
Yeah, so again, the answer will be eligibility criteria. Okay, so if you as an FOP, okay, fractional ownership platform, FOP, okay, are meeting the eligibility criteria of again 50 crores of asset size and 200 investors, okay, you will have to migrate to SM REIT platform, okay, within
That's a
6
compulsion?
months.
That's a compulsion?
Yes.
Okay.
Within 6 months, or if SEBI allows you an extension.
So when you say 6 months, when is the timeline going to start for that?
From 8th of March.
It's already coming.
It has already started, yes.
So just to clarify, you're talking about 6 months for them to get the approval of SM REITs, and from then they have 6 months to migrate.
No. So when you say about migration, okay, it just says that you have to migrate to this scheme, okay, or to under these regulations within 6 months from the 8th March 2024. So what I understand here is, as a FOP, okay, I personally, practically, I think it will be little difficult for all the FOPs to migrate within 6 months, okay, because getting registration and then listing your units again on designated stock exchange is a lot of work.
The question is so what I read, and correct me if I'm wrong, the fractional ownership platforms have 6 months to get the registration, and within a month SEBI will say approved or disapproved.
Correct.
And from there they have 6 months. to migrate.
For migrate, yes, to get
Is that
listed.
correct?
Yes, to get listed.
So on an outer limit, can we say the ones who are eligible will be converted and listed by a maximum of 12 months?
Looks like.
Except like
But-
you mentioned, unless SEBI decides to give some grace
An
period.
extension. Yes.
Got it. Okay.
So again, a follow-up to this is, for example, those who are not eligible technically or don't qualify for it, in terms of they remain to operate
As
the
a
way they are,
FOP. Yeah.
or they are supposed to shut it down. I mean, technically, is there a guideline from SEBI about whether they can operate the way they are, or they need to come back to the fold of?
So SEBI is not yet out asking them to shut down their offices. Okay, so they will operate as FOP. But then, as an I am just thinking the other side of the coin is, though they are operating, okay, as an investor, I will always be comfortable in invest in such kind of properties which are SEBI regulated.
This also brings down to one more question: is that so? Can an FOP still continue to launch proposals in terms of the way they are operating and not complying with the SEBI, as in not compliance technically, but they intend to keep
Applicable
it.
nahi hai.
So
The
then they
compliance
can
comes when it is applicable.
correct. So they can ensure that they do, if they want to be under the radar and not get to the regular, they can still.
So it could be a loophole that any FOP will invest in an asset worth more than 50 crores, okay, but the investors will be lesser than 200.
Nice. So technically, they can always say that we have less number of investors, and that's the reason we don't fall in for that compliance perspective.
Yes.
All right. So that's a loophole. So technically, then that actually gives us a message that the SEBI also needs to look into this. That there has to be a framework which has to be applicable to all. So either you comply or you can't be a party to it, kind of.
So,
Brilliant, yeah.
like Rupa said, probably that will be dictated by the market itself, where the demand for those properties may not be as high. Correct? Because like if an investor asks us, which one would you recommend? I mean, very clearly we are saying the ones which are, SM REIT approved are the ones where you should invest, because obviously, there are far more checks and balances. So I think that might just be dictated by the demand from the consumer itself.
Yes.
Fair
Yes.
enough.
So, Krupa, that takes us to our next question. You mentioned about the trustee. Now, what is a trustee? What does it do? And how does it make the investor's life simple?
So, trustees are a professional body, okay, which are registered with SEBI under a separate regulation known as debenture trustee regulations, okay. So, their main job is to act as trustee and to safeguard the interest of the investors. So again, when we spoke about AIF, okay, there is already a concept of trustee. When we talk about debentures, okay, listed non-convertible debentures, the act mandates to have a debenture trustee. Okay, so these are these are registered with SEBI under debenture trustee regulations. Okay, and they know their job is to protect the investors. So here, when I'm talking with respect to SM REITs or even REITs, okay, so trustee's job, okay, is to oversee that whether investment manager is doing his job correctly. Okay, so the trustee will make sure that the property or the asset is safeguarded. Okay, it's not encumbered, it's not mortgaged, it's not pledged. Okay, in turn, there are no borrowings, leveraging kitna hai. As per SM REITs, there is also a provision which is like skin in the game. So they'll make sure whether that investment manager is continuing to hold that kind of lock-in securities. So when I talk about securities, it means units, that kind of in the assets. Okay, whether the investors are getting their payouts, timely payouts. Okay, so this is whether the title deeds is maintained properly. Okay, it is so as per SM REITs, it has to be maintained in a safe bank locker. So they have to check whether it's there and everything is in place. So I think from the investor perspective, okay, the trustee is somewhere representing the investor to make sure that the investors are not duped and their rights and their interest is maintained. That is what the role of a trustee is. And in turn, the trustee charges fees to these REITs.
So, Krupa, just one more thing. How will be a trustee's role in terms of involvement of a SM REIT? As in, technically, it will always. So, two things that we see. Will this also impact the manager's role from a normal FOP platform? Because even right now, you have trusteeship companies that they are being deployed by FOPs, and the investment managers are also party to it. So,
Trustee here, when I'm talking about trustee, okay, it's an independent body.
so the same role they're playing right now will be continuing.
But
They will be custodians technically.
custodians, yeah. So they're independent. Okay, so there's an investor. I should not be in that worry. Okay, that the trustee and the investment manager are related. So the trustee will, see the interest of the investment manager and not mine. So that kind of thoughts may not crop up in the mind of investors, because the trustee is an independent body. It is regulated by SEBI under its own regulations. They also have to do a lot of disclosures and filings and governance things. So in that case, I think the investors are well protected where there is an independent trustee involved.
Okay. So, Krupa, you mentioned that SM REIT talks only about companies. So currently there are fractional ownership opportunities which are there in the LLP structure. Of course, we don't recommend them. But if investors may have a question that I've already invested in that, what happens to those? How do you foresee them? Will they not get converted, or is there a way for them to get converted?
So I covered it. So what I think is, we will have to understand, or we will have to wait if SEBI gives them any kind of leeway, but which I think it's difficult. But see, there is already a way. We can always convert a LLP into a private limited or a public limited. So I don't see if a fractional ownership platform wants to get registered with SEBI under SM REITs, there are ways. So can very well convert LLP into a company, okay, and then apply for registration. It's right. It's a small process for conversion of LLP into a company.
It brings to the intent of the
yes.
FOP, whether they intend to or not. But yeah, Krupa, that also brings one more question. So technically, there have been FOPs who have gone to a unit size of 5 lakhs. Also, so now the problem will be, now there are people who have had invested where the unit size is only 5 lakhs, so there is one unit which is 5 lakhs. So then what happens to those situations? Because then you can't combine two investors and give them
So because in SM REITs, it's mandatory to have a minimum subscription price as 10 lakh per unit. So when I'm talking, I'm talking of a lot of things like eligibility criteria, minimum price, but then we will have to see it's very subjective and case to case basis, that what kind of fractional ownership, and is there any way where we can fit this fractional ownership within the four corners of SM REIT regulations, and the investors can take the advantage of SM REITs provisions. So it's very subjective, I would say. I will not comment is there any way out or not, or any loophole. I won't comment there. Okay, but it's very subjective.
What do you suggest for new fractional ownership players? Should they launch right now or wait for their registration and then launch?
So I will say, if your the vision is very clear, you want to fall under this SM REIT provisions, I would always say go for registration and then do it chronologically. Okay, so prepare your offer documents or placement memorandum, prepare your REITs, okay, go to SEBI for registration, identify the product, okay, and then go to the investors. I think that is the right way to go about it. Yeah.
Fine. The only challenge people will face is the opportunity is wide, just go ahead. The demand supply, technically it's real estate, so the deals that are there currently available might not be available later. So that's possible. One thing. So the reverse is also possible, is what we understand. I mean, if you comply with all the other norms, they can always migrate to the platform. Perfect. Yeah.
Just make sure you're getting all the documents vetted by Krupa. So then you'll be in safe hands. So another feature, Krupa, again, please let me know if my understanding is correct. that this is going to be very much like a IPO style launch. So let's say the product or the scheme will be launched, and it will be launched like an IPO, and people will be able to subscribe. Is it correct that people will have 30 days to subscribe? Question
Correct.
is, so in that case, what happens if it doesn't get subscribed in 30 days?
Return back the money.
Oh, okay.
So, okay, see what happens is right now the SM REITs doesn't mention, okay, that what to do after 30 days. Okay. But there are provisions where it says that in 10 days or in 15 days you return back the money and all those stuffs. Okay, so when I say that it is listed, okay, I will say that in high-end REITs it's mentioned that 95% of subscription should be there. Okay, that is the minimum amount of subscription. Even when you go for an IPO of any any public unlisted company, okay, which launches its IPO, you have that kind of minimum subscription. And when that kind of minimum subscription is not there, the companies are bound to give the money back, the return their money of investors. Okay, that's where a role of an underwriter comes in play. So that's where the role of an underwriter
who will underwrite and say that, okay, I'm blocking X amount of units.
Because I also because see, the minimum public participation that you need is 25%. Rest all, okay, it could be investment management or their related parties, or So I personally feel that it's a lot of cost involved when you're going for an IPO. No one will want their offer undersubscribed or to return that money back. Okay, it's a lot of cost involved, lot of efforts, lot of intermediaries are involved. Okay, so 30 days is what the law gives, and this is where the entire and very interestingly the SM REIT provisions provide that the SEBI says that on anywhere none of the intermediaries should say that they should not create that FOMO kind of thing where there is this offer going on, oversubscribe ho raha hai, you market it with very different slogans, you have celebrities and models posing that I have invested in this, how about you? Right now what an individual real estate company does when they want to sell their units to the end users. Correct. Okay, so this is very interesting that there are also restrictions on marketing, or what kind of statements do you make while your offer is on. So that is also mentioned by SEBI.
Also, can you guide on the fee structure also? So technically, there are a lot of things like entry load, exit load in terms of an FOP when that is also being spoken about. So technically, the FOPs have a distribution channel. They have been selling through channel partners also, and they are charging an exit load where for technically when a hurdle rate where if they technically they are exiting an investor and they're selling the real estate, they will be maybe 20%, 10%, 15%, depending on the IRR that they have been claiming that this is what will be charging. So, is there any guideline provided by SEBI for SM REIT, the investment manager or the sponsor, as to what kind of when a scheme closes or when you're giving an exit to the investors, is there any transparency, or how are they going to make money to run the show? Because here there is a 1% year-on-year management fee that they are charging. So, is there any guideline, any structure with regards to this?
So see, there is nothing mentioned in the regulations as such, but when the scheme is launched, okay, that scheme requires SEBI's thumbs up. Okay, so when you make this offer document or placement memorandum and you go to SEBI for its approval, everything has to be mentioned there. That what kind of fees the manager will take, or is there any entry load, exit load, etc. Everything has to be mentioned. So that is the only place where SEBI will come to know that how much you are being charged, or then investor is being charged, what kind of return an investor will get. Okay, what kind of if there is any entry load, exit load. But with respect to the provisions are silent. But see, on the other side, I'm just thinking, okay, just a thought that if there are a lot of costs involved, okay, see, all the costs at the end is borne by the investor. My return will reduce. Okay, so if there is reduction in the return, okay, why an investor will want to continue with you or invest in even in other schemes that you launch? So I personally think from the commercial perspective, okay, I'm not talking about legal perspective, but any person will try to minimize the cost so that there could be a good return to the investors.
The reason I asked you for this was because in IPOs, a typical IPO or other schemes where SEBI is very, very closely governing stuff, for example, stock market, there are a lot of definitions in terms of mutual funds which are already defined. We have seen the charge that was, when the distributors were given a certain amount, and today the distributors have the entire their fees have come down drastically. So those kind of structuring have been defined. So here SM REITs typically, if we follow, it's a mix, like you rightly said, they have taken everything good from everywhere. For example, from the stock market, from the air, from the mutual fund, and they have tried making a nice product for a retail investor. So these are these the open points, or SEBI you think will come out with their own separate
I
guidelines? Or
think SEBI will come out with it. Okay. So I am also understanding right now when you are operating as a fractional ownership, the cost was not so high. So when you are listing, okay, so first of all, SEBI fees for getting registered as REIT. Okay. Then you have listing fees. Okay. Then you have all the intermediaries fees, that is your merchant banker, you have your trustee, okay, you have legal counsels. The fees is so high, okay, when I compare it with fractional ownership. Okay, so I think SEBI is giving time to these fractional ownerships to grasp that first, to digest that, okay, and to understand that what kind of fees now they have to take, or what kind of property they should invest in to get a higher return. I think it is more of now they have to evaluate it internally. But if to answer your question, that right now there is no such mention about the costs or the fees, management fees that has to be taken by investment manager, any cap or anything. But I think it will come, not now, but maybe later.
So a lot of investors are very thrilled because SEBI has, decided to regulate this, and of course, kudos to SEBI also for taking a proactive step. Well, the implication of SEBI regulating it would mean that the question really was, if I have a complaint, what do I do? So what happens now when an investor has a complaint?
So scores. We all know about a platform known as Scores, okay, where even for listed company, so SEBI has brought out this platform Score, okay, it is like now for donkey years this platform is available, where all kind of intermediaries or all kind of SEBI regulated entities have to register themselves with Scores.
Mhm.
Be it an investment advisor, be it a listed company, okay, they register themselves with Scores.
Mhm.
So as a consumer or as an investor, I can very well go and complain about the REIT or an advisor, okay, under this Score. Now when I talk about Score, so what will happen is SEBI will receive this complaint, okay, in turn SEBI will send it to the trustee. So when you read the provisions, okay, one of the duty of a trustee is to make sure that the investor grievances are solved. So I think as an investor, I can directly write it to the trustee, or I can even go and write it on the Score.
one more follow-up question to this is again, like, so there is in all other formats, you have distributors, or you have stockbrokers, you have boards, and all that through whom these guys are supposed to buy these. So, is there any guidelines for SM REITs as to any particular requirement from an advisor who needs to have certain qualifications to advise or to tell people that whether they should be able to buy through this platform, or anything that you feel that will be a follow-up or something that will be required? Or
That will be required, okay. So right now when it is real estate, we see RERA, okay. So there are brokers who are RERA registered and then who advise or help clients in getting registrations or investing in these kinds of real estates or the properties. But here, when you talk about specifically about SM REITs, there is no such mention in this regulations. Okay, there are eligibility criteria mentioned for investment manager. Okay, who will manage this property. Okay, but from the advisor perspective, there is nothing mentioned. So I think that should also come. And let's see, I think that answer will be given by SEBI soon, seeing how practically the market is moving or what kind of people are coming in the market and advising the investors. That should come.
So, Krupa, if you can just help us summarize on SM REITs in terms of the structure and anything else that you'd like to highlight for our viewers.
So, only 3-4 things that I would like to sum it up with. The SM REITs was introduced by SEBI on 8th of March 2024. SM REITs is a trust where the asset size is 50 crores, from 50 crores to 500 crores, with minimum investors 200, excluding investment management, its associates and related parties. And the minimum subscription price is rupees 10 lakh per unit. Very important. Migration, every FOP, that is fractional ownership platforms, fulfilling the eligibility criteria, have to migrate to SEBI registered REITs, okay, within 6 months, take a registration certificate, and then has to mandatorily list its units with the designated stock exchange. Very important, SM REITs can invest only in an asset which is generating income. So no under development or under construction properties they can invest in. So an asset which is already generating income, which then in turn is given to the investors as their payouts. So this is how I would like to sum it up. And this is my personal take that this will take some time to settle, okay, being a new regulation, but it is definitely a welcome move for the investors, because we as an economy are now growing, so we need some regulatory authority to regulate these kinds of investments also, like regulating stock markets or mutual funds. So a big win, I think, from the investor perspective. Okay, there could be some kinds of concerns with respect to costs and other stuff, but I think that is manageable, because costs, I think as an investor, cost is fine, but duping is not fine. My money should not go in vain.
It's safe. Yeah, fair enough. Great. So
Krupa, one more important aspect that we feel is about highlighting the part of the investment manager's skin in the game. So, what's your take on that, and what SEBI speaks about?
So SEBI for SM REITs, SEBI has given lock-in periods, okay, for the investment manager to keep investing and to hold the units. So it is and very, I think, very systematically this lock-in period is diminishing. So when you see lock-in period from start, like from the listing, is 5%, okay, and if this SM REIT has taken some leverage, okay, it is 15%. And as and when time goes, this lock-in has reduced. Okay, so it is like not immediately after 3 years, no units are being held by them. No, it's not that. 5%, then it has reduced to 3%, then 2%, and then 1%. So over the years, okay, the SEBI has reduced the holdings of this investment manager. Okay, but immediately, but I think as an investor, I should be relieved, because I am sure the person who is managing this assets is somewhere involved. His own skin is involved. So he will take right decisions with respect to the property.
So a follow-up question to this is, you mentioned that 15% if they leverage it. So can they leverage it as a scheme? Can it be leveraged by the investment manager?
So they can. Of course, there are provisions like not more than 49%. Okay, and then if it's more than 25%, there is a credit rating to be taken. They can, of course, but they are not encouraging it, and that is the reason the skin in the game is 15%. Then the lock-in is 15%. So I think they don't want them to leverage it.
Could you quickly explain what leveraging is?
Leveraging is borrowing. Okay, so
Basically, they mortgage the asset and they borrow
yes,
money and they
yes, 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 yes.
One last question. You mentioned these are going to be dematerialized and listed on the stock exchange, which means it's going to be a person can individually exit their own units at any point in time, like your stocks and your mutual funds.
Yes.
Great. So for all our viewers, SEBI, a big thank you to SEBI for doing what they've done. And two major things. One is that the REITs, the SM REITs will mean that your fractional ownership opportunities that you've invested in may be migrated to tradable dematerialized form, of course if they meet the eligibility criteria, and it's going to be regulated, so you are going to have a place to complain in case something goes wrong. And with that, if you guys want to follow or know anything about fractional ownership or SM REITs, please follow our channel. If you have any questions, because I'm sure we may not have covered everything, we've tried to. So put in your questions as comments, and we will request Krupa as and when she is free to answer those questions.
Sure.
And with that, a big thank you to Krupa for spending so much time clarifying all our doubts, and with a request that we will need more. We'll need probably 1 or 2 more sessions as things get clearer and clearer to solve our doubts.
Definitely. And thank you so much for giving me this opportunity to, spread this education among publics. Thank you.
Thank you. The pleasure is ours, Krupa, to have you here.
Okay, thank you everybody. Bye.
Bye.